At Vector Algorithmics, we measure success differently. It's not just about how much you make in one market. It's about how your entire portfolio performs across assets. This month, our stock algorithms are up a whopping 1.7%. These numbers aren't sexy, they're just reliable. So while stocks have been grinding sideways for October, our futures algo, grass-fed prime beef, that's our strategy, is up nearly 14% this month. And our crypto algos are up roughly 33% year to date. That's the advantage of diversification, as you should know. When one market cools off, another picks up the slack. We built Vector's multi-market system to perform through the full market cycle, not just during hype months or trending phases. This month proves that stability isn't luck, it's architecture. Now, let's take a look inside the stock algos themselves, how they're navigating sector rotations, filtering noise, and preserving capital, while crypto and futures lead the gains for October.
Okay everyone, so I'm going to break down here our stocks and equities algorithms. I'm actually going to break down a few different time periods for you to have a look at the performance of this algorithm. So we're going to look at the period of October 2025, of course, but we're also going to look at the whole year of 2025 and compare it to investments such as the Nasdaq or the S&P 500, which people generally see as safe bet investments. Okay, so October 2025, was it a success? It was, ending the month with a 1.28% profit, which is nothing to shout about, of course, but if you are already a trader or a seasoned trader, you'll understand that profit is profit, and not all months are going to be huge compounding returns. Okay, so comparing this to something like our futures algorithm, which trades every single day, where you're liquid at the start and end of every day, our stocks algorithm is more of what we call a sniper strategy. Okay, so we're generally trading 1 to maybe 6-7 times per month, depending on how many tickers we're trading. So in this case, over the course of October, we traded 6 times. Okay, and you can see through this list here, we traded Apple and Nvidia. Now, some of our Tesla clients possibly would have been worried, thinking there is something wrong with their algorithm as we didn't take a trade or Tesla didn't take a trade. Now, this is as it should be. Okay, that just means that Tesla didn't find the right setup and right entry markets to enter a trade. Okay, and we do see that throughout the course of the year. So we started the month, let's say, on the back foot. We had 3 losses in a row, although they weren't very significant. As you can see, our average win and loss was 2 times our average win was 2 times the size of each loss. Okay, so we started with 3 losses, which might have worried a few people, but we finished the month strong with 3 wins in a row, okay, which were more significant than the losses. So we ended up with a net profit of 1.28% and a trade win of 50%. Now, if we zoom out of it and we look at how we've performed from the 1st of Jan up until today's date, you can see we're up 50% overall. Now again, this is nothing huge to shout about, but now comparing this to safe bet investments in the S&P 500 or Nasdaq, we're nearly doubling the results of those investments themselves. Now, most people who make those types of investments will see huge drawdowns throughout the year. They will see drawdowns of up to 20, 21, 22% in the calendar year, and they will see monthly losses. But generally, people know the historical advantage of those investments and will still hold without being too worried. Now, when you compare that to something like our algorithm, we're actually dealing with lesser drawdowns and higher returns. Okay? So you can see over the course of this year, we have a trade win of 70% overall, which is incredibly high, and a profit factor of 3.4. So overall, you can see the equity curve down here from our account balance is very, very strong. And you do see drawdowns here, and you do see things on the decrease, but the whole point with these investments is seeing them and thinking about them over the long term. So a minimum of 12, but hopefully looking at these as a 24-month, 36, 48-month investment that's the time period where you really do see the compounding results of investing into these algorithms themselves.
Everyone knows anyone can show a hot streak. Very few show consistency across markets. Our stock algos are positive, futures are pushing higher, and crypto continues to outperform. Now that's balance. That's portfolio design. This is what true diversification looks like. Systems that complement each other, not compete with each other. So if you're ready to trade like an institution across stocks, futures, and crypto, visit vectoralgorithmics.com to learn more.